Hi, and welcome back to Market Conversations. In this video, I'm just going to share with you how it's better to make money by selling cash secure puts versus buying calls and not get into FOMO. So if you guys are interested in watching, go ahead and stick around. But before I continue, I just want to let you know that I'm not a financial advisor. This is just for entertainment purposes only. Also, I created a Patreon page where like-minded people can get together and talk about stocks, cryptocurrency, options, and just learn and grow as a community. If you guys are interested, I will post my link down below, and it's only 33 cents a day. So let's see, I've been selling cash secure puts since November, and it's definitely been a life changer. You don't make a lot of money versus if you were to buy a call option, but it is consistent. And if you want to be a long-lasting trader, investor, you want to do something that's consistent. I'm going to go over this article with you if you guys don't know what is a cash secure puts. What if you could buy stocks lower than the current market price? And what if you can make money when you're wrong about the direction of the markets? If either of those scenarios sounds appealing to you, then perhaps you should consider selling a cash secured puts. When to run this strategy, you're long-term bullish on a stock, but you don't want to pay the current market price for it. In other words, if the stock dips, you wouldn't mind buying it. You might consider entering a limit order at the price you like to pay for the shares. But selling a cash secure puts gives you another method of buying the stock below the current market price with the added benefits of receiving the premium from the sale of the puts. How to do it? Sell an out-of-the-money put, strike price below the stock price. You may want to consider choosing the first strike price below the current trading price for the stock, because that will increase the probability the put will be assigned and you'll wind up acquiring the stock. In order to receive a desirable premium, a time frame to shoot for when selling the put is anywhere from 30 to 45 days from expiration. This will enable you to take advantage of accelerating time decay on the option's price as expiration approaches and hopefully provide enough premium to be worth your while. But what you consider a good return is up to you. Once you've chosen your strike price and month of expiration date, you'll need to make sure there's enough cash in your account to pay for the shares if the put is assigned. And that's why it's called cash secured puts. Ideally, you want the stock price to dip slightly below the strike price and stay there until expiration. That way, the buyer of your put will exercise it. You will be assigned and you'll be obligated to buy the stock. The premium received from selling the put can be applied to the cost of the shares, ultimately lowering the cost basis of the stock purchase. So this is the recap. Selling cash secure puts is a substitute for placing a limit order on a stock you wish to own. You receive a premium for selling the puts, and if the options are assigned, the premium can be applied to the purchase of the stock. If the stock doesn't dip below the strike price by expiration, the puts will not be assigned and you won't have the opportunity to buy the stock at the strike price. However, the options will expire worthless and you get to keep the premium. Just remember, only sell puts on the number of shares you can reasonably afford to buy and have a stop loss plan in mind in case the stock goes completely in the tank. So that is what I've been doing for the past few months. Let's take a look at this Sundial. I sold a cash secure put. It has a 150 strike price and I was able to collect $15. So all I needed was $150 and collateral in order to collect $15. Right now, the stock price is at 151. So if it stays around 151 or it drops below 150 on expiration dates, which is February 26, I would have to buy 100 shares at 150, but I was able to collect $15. Instead of having my break-even price to be at 150, it is now at 135. Let's take another look. So I sold Assertio cash secure puts earlier today. I did a video on that, and this is a March 19 strike price. I was able to collect $25 on a $100 collateral. That is a 25% return in 1 month. So I sold 2 of this. I was able to collect $50, and all I need to put up was $200 in collateral, and my break-even price is 75 cents. This adds up fairly quickly, and it's less risk, less reward. So Senseonics, let's take a look at this one. This one I was able to collect a higher premium because it is at $4. So $400 in collateral, and I was able to collect $110. My break-even price is $2.90. I am fine doing this. I am fine doing this instead of buying shares at the current price because we just don't know if the price is going to go down. At least this way, I get to buy the stocks at a lower price and I get to collect a premium along with it. This one's a nano dimension. With this one, you need a higher collateral. So this one is 1,250. So to get the collateral, you just multiply 100 by the strike price. And I was able to collect $158. This one expires March 19th. JAG-X. This is a 250 call. So what I'm saying is I want to buy JAG-X when it hits 250. This one also expires in March, and I was able to collect $70 on a $250 collateral. So I sold 2 of this and collected $140. And the rest are leap calls. And then now I'm going to show you my other accounts. Palantir had earnings, and it dropped on earnings as well as lockup expiration ended and people sold their shares. So the stock price went down. What I did was take advantage of the high implied volatility, and I sold cash secure puts. So let's take a look at this one. This is a 25 strike price. What I'm saying is I don't mind buying shares at 25, but right now the stock is above 25. It's actually in 29.60. So this will be expiring worthless, and for that I collected $63. So I sold 2, so it's over $120. This one is a 27 strike price. I collected $141. So this premium I get to keep upfront. It's given to me upfront versus I have to pay the premium on option calls. That's why I try not to buy options. And the rest are other dates. This one definitely need more collateral, so I needed $3,200 on this one to collect $205. But as you saw from earlier, I was able to collect a decent amount of premium on penny stocks. And the reason why I say that selling cash secure puts is better than buying call options is because of this. He paid over $14,000 on 1,000 contracts, and now he's down $13,000 because look at the strike price. It's at $250 and the other one's at $4. The stock price is at $150. This thing expired worthless. So when you're buying a call option, you don't want it to expire worthless. You want it to expire in the money. This is a good example of why buying call options is very risky. Yes, some people make a lot of money, but how often can they make that return? Let's take a look at this one. And this person bought 4 contracts of Tesla. He needed Tesla to go to 919 to break even. Tesla today is under 800. So he's down $8,000. He paid, if we look here at the average, 1955 times 100, that's $1,955 times 4. That's roughly $8,000 that he's down on 4 contracts. So guys, it's very risky. Here's another one. This is an Apple call option. He bought 100 contracts. It's 134 strike price. Apple today closed at 129. It expired worthless, and he's down $10,000. So those are just some extreme call option buys. And I don't want anyone to lose money on call options. That's why I always try to push out selling cash secure puts and not try to get into FOMO because I am down on BlackBerry as well. I have shares of BlackBerry and I have shares of Nokia. But these are shares, so I don't have to worry about them becoming worthless and losing the money. At least like with shares, I can hold this forever, which I'm gonna do. Best way to make money is to either buy shares or sell cash secure puts on stocks that you don't mind owning. I've lost a lot of money buying call options, and it's very stressful. So if you guys want something consistent, buying shares or selling cash secure puts is the way to go. I know it doesn't sound sexy at all, but the money is consistent and it has been consistent for me. Even if I do have to buy shares, at least with shares, I can hold on to them as long as I can. Anyway, thank you so much for watching, and do consider joining the Patreon page. Thanks a lot. Hi there. If you are interested in helping out the channel, you can sign up for Webull if you haven't already. They are currently offering 2 free stocks now. It used to be 4, so you don't want to wait until it gets to 1 free stock or no stocks at all. So you get 1 free stock when you open up a Webull account. And when you deposit $100 or more, you get 1 more free stock, which is valued between $8 and $1,600. And if you are transferring from another brokerage, they will reimburse you the fees up to $100. And you will also receive a complimentary 3-month subscription to Level 2 Events NASDAQ Total View from the day you sign up. So guys, what are you waiting for? 2 free stocks are waiting for you. Thanks again.